Hello, everyone. Hold on one second. How is everyone doing today? How is everyone doing? I just got to deal with something real quick. Real quick. All right. Let's just deal with this. Here we go. Sorry about that. All right, I am back. How is everyone doing this fine Thursday? What else is going on? Hey, Patrick, happy no stag or inflation Thursday. Well, I mean, the arguments are we don't have 10% unemployment and we're not running 10% inflation still. But you know what? From my perspective, it's heading into very stagflationary. These government numbers are weird, by the way. Yeah, they can keep putting these things out, but you know what? You just look around and it tells a different story. But that's not why we're here. We're here to look at the markets. Good morning, Patrick. What else? Amazing. Article comes out just before earnings. Just before earnings to pump some. I'm not saying anything. Again, just an interesting coincidence that Apple reports after today, and the AI article comes out the morning of. Interesting timing. Very interesting timing. We had the jobless claims come out. What else? What else? Where was it? Good morning, Mark. Yeah, the more student debt canceled. What else do we have? Where is this? Isn't this? I think this is a lot of colleges though at this point and universities. Now I'm not. You know what? I'm nothing. I'm saying about Biden. This institution falsified data, knowingly misled students and cheated borrowers into taking out mountains of debt with leading promising career prospects at the end of their studies. What sociology major at or a women's study major or some of these other garbage degrees, was you're paying 80 degrees. I'd even put a garbage degree in journalism at this point. Columbia is known for journalism. Well, I don't think they actually teach journalism. I don't actually. I think they teach advocacy, which is not journalism. So, flushing your money down there too. Good morning, Martinez. Hey, good morning, John. Thank you for tuning in and thank you for calling out Sterling. Good morning, Heinrich. Good morning, Anissa. I gotta say hi to everybody. Good morning, Daniel. Good morning, Jacob. Nice numbers yesterday on NASDAQ. Your low support and high resistance. Well, you're welcome. It's more that you learned what I'm doing so you can reproduce it yourself. Hello, Charles. Hey, Eric. What else? Good morning, McRangers. I'd love to say McRangers in the morning. That's fantastic. If the grounds for forgiving student debt is now mountains of debt that don't lead to promising career prospects, about 95% of student loans. Yeah, that's what I mean. I would if unless I don't have kids, so my dogs when they canceled the SATs and everything, my dogs could have probably got admitted. But now that they're reinstituting, I don't think they're going to have high enough scores unless we DEI them. Maybe it's a DDEI, a dog diversity and equity inclusion thing, and then they can be included. Then I can pay $80,000 a year for my dogs to attend university and get a worthless degree. Maybe I'm missing something there. All right, let's just get to the numbers. The main thing this morning was initial jobless claims, right around in line. Interesting thing was continuing jobless claims coming in better and dropping below 1,800. Other than that, very uneventful morning. Unit labor costs was interesting, though. Unit labor costs, look at that, 4.7%. That is steep. So labor's still pumping up. What else? The rest of the day is not much. We have factory orders. That's not really going to be shaking anything up. Tomorrow, though, remember, we have non-farm payrolls and we have the ISM services numbers. And ISM services and employment is going to be interesting tomorrow. So Friday's the big day, which means we could get that little relief bounce back. So far, it's buy it all. Buy it all Thursday morning. Pre-market buy it all. There's not much that's really that red. Uh, so it's buy it all after the volatility from Powell. We have consumer cyclical, technology, real estate, finance. What do we have? Oh, only basic materials is the only negative thing. So it's buy it all except for basic materials. Sorry about that. Gonna watch if that shifts. I'll give you my key thoughts, though, what I'm looking at. We also have pause through September. Now, again, Fed paused yesterday. Powell speaking out of both sides. They're somewhat tapering off some of their QT. They're not doing as much. So, which is technically an easing in my book. So technically an slight easing, although no cuts in rates. And again, data dependent. Well, what? So you're supposed to be trying to guide a ship, but then everything you're reacting like meeting to meeting based off of the data. You know what? It's garbage. Get rid of them. Get rid of them all. Get rid of them. One cut still priced in this year. Fear and greed still in the middle of fear mode. As I mentioned before, did anybody check at Peloton earnings? I did not this morning. It was on my list to do, and I ran out of time. That was the only thing. I still ride my Peloton. But would I be buying the stock? No. Apple. After you have Apple, Coinbase, but Apple's the big one. You have Cloudflare. Apple's really, the America's going to be keying off that this afternoon. Then you got Hershey with the poop emoji. So not much tomorrow. So, good morning, Legion Reaver. Oh, well, I'll just ask questions. Maybe you could give the next few seconds on where you get the resistance and support today. All right, I'm either watching for I'm watching for choppy to up now that the non-farm payrolls. So, but what's key is yesterday's low on the S&P so yesterday's low, 537.75 to the 62.5. I'm still going to be watching that for the support area. If it does sell off, I'd be shocked if we got back there. But again, anything can happen. That's very key support. And still, before we could break down, and if we bounce today, that's the key area I'll be watching tomorrow. Now, if I take some of this off real quick, let me just try to do this. Today we had the volatility, the J. Powell volatility, but the really key area on any rally that gets through the pre-market high of 50.90, that's going to be my choppy resistance area. If we get through there, 50.96, 50.97 is very, very key. It's to 50% from this. If we drop down in time frame, you see right here where we cannot get above this 37.5 to the sky's little quick spikes. So going in the open, it's 50.81. Then I'm looking at that 50.90 number, which I already talked about. Right above that, this is sort of a pausing area from the breakdown zone on Tuesday and that 50% harmonic. So that's going to be key. Now, if we get momentum bars launching today, that's going to be my first real target area. And then there isn't much. We have the little back and forth until 5106, but 5106 to 5110. We start moving through 5110. The key minor area is 5118. You had the run up from Powell and then the post Powell after a press conference, the big reversal. Some of this volatility is just getting stupid. It was buy it during a press conference, sell it afterwards. But so the real key area in here is not where the spike high was. The spike high, I just use a 75% right there, 51.25. The key area from where it really ran out of momentum is coming into 51.17. So 51.17 is a minor number, 51.25 is a major number. So if I had to summarize, if it can break out and we get a bullish mode, my major targets are 50.96, 51.10, 51.25. My minor targets are 50.88 and 51.17. So what do I mean by major and minor? Minor is where I could take an action like, okay, let's say I'm in a long position or there was a long setup. That could be an area I could raise a stop. Also, minor are, let's say we rally up and peter out there and start hitting resistance, that's going to be a minor resistance point. If we break through and retest that level and continue on our way, which would be a break of that level, a little pullback to retest and hold that level, and then we rotate up, my major target is where I'll take my next key action, which generally is unwinding, or at least unwinding partial position, or at least getting to more of a break-even trade. So something's off the table. So that's what I'm looking for. Above that 75, I'm watching 51.35. So let's say we had a rip your face off momentum day. 51.39. Now, on the bigger picture, I'm still watching for a multi-leg down move. Right now, this is a channel flagging corrective pattern. All right? So what becomes very key? Let me undo this in the short term so I can get back to what I had before. All right, come on. All right, so overall, in the bigger picture, I mean, we got non-farm payrolls tomorrow. Overall, 51.48 is the retest, and that's the 50% from the sell-off zone and where it capped out before on Monday, and then we had the Tuesday sell-off. So even if we continue the channel up, the only thing that I really need to get into anything but a short-term corrective phase is still that close above 51.95. Not only is that a major breakdown zone, that's the 62.5 rule, and that has to be a daily close. Other than that, we're still in a corrective channeling flag pattern, and I will be watching for the next rotation. Therefore, if I get a topping pattern somewhere up here, that's great. I'll be watching for then a retest of the channel. And yesterday's low, because of the volatility yesterday and the where it sits in the short term, will be the key. Not only will we start breaking below a major area of the flagging channel, okay, if I put back on these little harmonics, you see that's the 62.5 from this move so far. So if we don't come out and break above that 50% area, that 62.5 is going to be key on an intraday basis, but then with a follow-through close. Because once we close below there, it's really a quick trip to retest the prior swing low, and if that's broken, we're off to the races, and I think we could easily get back to the 4,800 area for a multi-leg down. We'll have to revise that analysis as we get there. When do I start watching for that bigger multi-leg down? Is if we get that close above 51.95, because I'll be watching then for a retest of the high area and a possible bigger topping pattern coming into play, which may never trigger. It could just mean, hey, we're going to break out and go to new highs. So there you go. That's my overall analysis. Also, why is this key area very critical? This is the weekly chart. We came down, weekly rotation zone. We bounced last week. Okay? So once we start taking out this low area, then that's when I really start focusing on that 4,800 area, and I'll go into some more specifics if we break that. So there. Looks like a flip the bird. Oh, I think we're already in it's a very interesting economy, because people are somewhat running out, and you have a very distinct economy. You have I'll call it the upper class economy, which are still doing fine. It's the inflation, I might be paying more for my Whole Foods fruits and vegetables and meat, but it's not really affecting my lifestyle. And then you have the middle class and lower class, which is really struggling, using debt and credit cards. So I think there's a major two-tier economy, especially the way all this stuff was handled. That's going to get me into another rant, so maybe I'll have to get in that later term. But we have a definitely two-tier economy. I don't believe a lot of these numbers coming out of the government right now, not only because it's an election year, and I don't believe much coming out of the government at all anymore. I think they're trying to massage stuff and just keep it going with government spends more money, which is also artificially propping stuff up. Student loan forgiveness, artificially propping stuff up. It's helping people that that are somewhat struggling to, all right, gives them a little more short-term relief. So we'll see how all this plays out. But it's a two-tier economy, and the middle and the lower class, I think, is already in a recession. The upper class is still hanging on, although it's interesting because you keep seeing all these pretty substantial companies announcing more and more layoffs, and you're not seeing it in the numbers, which is strange to me. But I said good morning, Chris. Yesterday, monthly pulled back right to the previous month. Yes, that's correct, Heinrich. So you are rich, not middle class? I'd put myself, I don't know where you, I wouldn't put myself as rich. I'd put myself as we are well off. We've worked very hard and are well off. But I'm not like top 1%, because that's actually not even a goal of mine. I talked to my sister a while yesterday, and she asked me, if you could have whatever, you could buy a new house in Arizona, which we will at some point, whether it's we'll figure it out and everything. I'm like, I drive a minivan now, be out of choice for the dogs. I don't need, the part earlier in my life, I had some sports cars. Do I need a sports car now? No, I'd rather have something. We don't need two cars because one's just going to sit there most of the time. I have one car. Is that out of because I can't afford a second car? No. We could go out and buy a second car. We own all our stuff outright. We have no debt whatsoever. You know what? We can afford, if an emergency comes up, we can pay for it easily. But again, am I looking? My sister said, "What would you want?" I said, "I want not a little, but I want a 4-bedroom, maybe 2.5 bath house. Decent size in a good neighborhood with some land, with a little land. I don't need fancy cars. I don't need boats. I don't need planes. I don't need any of that. I don't even want any of that. It's just more crap. I'd rather have a relatively simple lifestyle where we can pay for the necessities, and if stuff comes up, we can help dogs, we can help people, we can help things, and that's my goal. My goal is to not chase money. My goal, you know what? It's I don't need it. I don't need it. I don't even want to it's not a goal of mine. My goal is rather to help people and teach people, help dogs, and work on also my spiritual lifestyle, which I don't really get into much on this. But that's my goal. So I don't know how I classify myself. I don't want a multiple properties. I don't care about it. It's nothing I need. I don't need multiple cars. I'm not going to waste money on that stuff. I'd rather rescue more dogs, and if people are struggling, help people. So I don't know where that puts me, because I don't look at it. I look at it as we're well off, but we also work hard and we manage our money. That's just me. I mean, right now we're living in a decent neighborhood. We're renting in Scottsdale. We're living in a decent neighborhood, but I wouldn't call it pretentious. It's not a pretentious neighborhood where we're renting in right now. I've lived in this neighborhood before. I know it. It's safe. It's very peaceful. So, that sums me up. Sorry to get distracted, but that sums me up. NASDAQ, let's just get to that real quick. 17, it's still 62.5. You're watching that on the closing basis. The same thoughts still hold. You know, and I think we're gonna do my final class. I'd like everybody's help with it. We'll do the final sort of here's why I do everything. Here's the why I've structured it, and the final release of my information, which I think is the core fundamentals. You can always add in whatever else you want to it, but why I do things the way I do them, which might help people. You might just look at it and say, I don't like that stuff. Fine. But that's my goal, to just my final release of what I've learned to help people, and then we'll see where we go. It's going to take some work, and I'll get it out there. I'll probably start on it in the next month or so. Now that I'm situated back in a better environment for me. The key area is 17,911. Okay, today, if you're looking at stuff, today I'm using the retracements again, just like the S&P. The area, look, we have a significant area I had with the black line before, and that's reinforced by the 50% harmonic. So about 17,675. And then we're looking at 17,742 on today's intraday. You can use that as a target, but then I'm watching that on a closing basis. Bird just landed in the pool. And then 17,811, then 17,880, but we're still in the flagging pattern. Same thoughts. Dow, I'm not really going to go into today. It's very key, though. You see how we dipped below yesterday, but we did not close below the 62.5. I'm watching first that 37,965, but then yesterday's low in the Dow is very key. You can do your own retracements there. The Russell, also flagging. Key resistance today, I'm really watching 2028 to about 2030 on any rally. Above there's 2039, and then for me to get in bullish mode short term is 2069.6. The VIX, again, 15. If we start dropping below 15, especially with some momentum and volatility starts dropping out, then I will watch for a more little sustained rally. And in the short term, 1575 and then 1650. The DAX, not much to talk about. Keep still an eye with this 50 EMA and the low from last Thursday. Other than that, it's in just a sideways pattern. To start the next sell-off, I need to close below 1797. To start the next up move to where something I'd hold for longer is 18,377. Other than that, it's just trading chop. Notes, not much to talk about yet. Let's take a look at those more tomorrow, including the yield. It's just in a sideways correction with the rising rotation zone still. The dollar, we still have the potential double top. If we get a close below 1, I'd just use 105. 105, and that would trigger a bigger pullback with weekly cycles at the top. Then I'd be watching the prior breakout zone and the bottom of the weekly rotation zone. Crude, by the way, we talked about that head and shoulders that Sterling asked about yesterday. We closed below it. Here's my target. With this breakdown, we're now below. I'm watching to see how we close this week, but the magnet price, look at this on the weekly chart. Remember, I've talked about that weekly 200 for forever? Look where that is in relation to the 62.5 right now, from this run up in the lows of December to the highs of April. That's going to be a major target for me, more so than those head and shoulders. Okay? I'm actually just pulling this because this is the target area I'm utilizing. With the magnet price being right around that 200 on the weekly. And short term, there's no little setup yet. Okay? And anything right now would be a bounce setup. Why? Look at the daily rotation zone, hooking over. So it would be a bounce play, and then I'd be watching for possibly the bigger pullback. The only thing at this point that changes it and this is going to, if it keeps going down, these levels are going to drop, is if we get a close below that, above that 62.5. You can structure a lot just using rotation zones and harmonics. Gold, still watching with the double triggering, still watching for lower prices, especially a return to this flagging double top pattern with a 2261. Overall long term, does this change anything? No. We could easily get the pullback into the weekly rotation zone before another ramp higher. Thank you, Jake. Thank you for the super chat. That's really appreciated. Thank you so much. Mike, are your classes on? I don't know how I'll do the next set of classes. There's probably going to be some sale, like some cost involved, just because it's going to take me a lot of time. It's not going to be something that people can't afford, and I'm not selling garbage. There's going to be some cost just to help offset my time and cost, but it's not going to be something where people are going to go, oh my gosh, I can't afford that. I've given away so much here anyways. You can pretty much tune in every day and learn, although I'll give some more information I've not talked about. You're the best. Thanks for coming out every morning to help us learn. Well, you're welcome. Hey, Richard, thanks. We're very similar in many ways. Much respect. Thanks for all you've done for us over the years. Your time is very... Well, thank you for saying that. My uncle taught me this. It's not what you make that matters. It's what you get to keep. And it's also what you do with it. Because you can make a lot of... You can be a Scrooge, make a lot of money. You know what? Maybe you have a great life, but if people around you are hurting, or animals are hurting, or, you know, things aren't good, and it's more important for you to keep your lifestyle, your wealth intact rather than helping, anybody can do what they want. They really can. But I think you know my stuff. Help. In whatever way you're capable of, and all of us are different. It might not be financially. It might be with time. It might be with helping people who are strong. Maybe you're talented at fixing things or building things. Help people. Make this life better off. That's my thing. Now, we had intervention again. I'm sorry I'm going in the open. If you have to leave, I'll leave. I understand. If you need to put on some trades or adjust stuff or put me in the background or just turn off the channel, that's fine. You know what? Don't let me sidetrack you. More looked like intervention. But look at this. We're at the rotation zone again. And this might be short-lived. Now, I'm watching the 157.52 on any bounce is key in the yen. But we went through a very long time without any intervention, and now they're trying to hammer it down, but we'll see if that sticks. Euro, channeling, double. This is where I need that dollar index to trigger the double before we get to that bigger pullback. Spiders, do the same thing I did on, we gapped up this morning. The key thing, look at the close yesterday in relation to the 62.5. Just use 500. You close below 500 on the spiders? Not good. Retested the lows, and then they start the next leg down. Again, you have the channel. The channel is key. All right. Now, any down move I'd watch for the gap fill, but I'm really learning. Let me just peek at the S&P real quick. I just need to look at this really quick. Because in the short term, all right, going in the open, we have a lot of support coming in at this 50.77, 50.76, 50.77. The tick, I'll jump back to that stuff. The tick opened strong. So in this tick pullback, we already saw the green pre-market. Tick opened strong, so we're watching. Tick pullback. And then if this low area holds with the tick pullback, I'll be watching for the rotation back up. And look at what was tested. 50.88, 50.89. So 50, that's going to be the key area. If this level does not hold, then I'll be watching to see at least in the short term, this 50-65 area, if we get that in a hold and the tick starts climbing. All right. That's how I start going into the open. Generally, those are the things I look at. With the spiders, here's with the retracement levels. Hold on. I got too much clutter. Oops. Hold on one second. Let me take some of this off real quick. All right. The key area for those spiders, 5090. Wait, I'm on the S&P. What am I doing? People? The spiders. There we go. The key area, 505.35, and then on a closing basis, 506.75. You get above 506.75 on a closing basis, I'm watching for the channel to continue. But the only thing that gets me more to a daily, hey, we're going to be in bullish mode for longer, they close about 513. The Qs. Roughly 428.76 is the key on the closing basis. Today is 427.22 as the first level of resistance. So that's where that sits. And really yesterday's low Wednesday's low. Yes, yesterday's low. Boy, right at the 62.5. So we break yesterday's low and close below 420.83. That's the breakdown signal. By the way, Bitcoin, the coin of Bit, triggered the double yesterday. So any rallies, I'm watching for rollover plays. And look where the 200 is. And look where this is a lopsided double. But look where that target is with the 200. And look, we break below. If we could break below this weekly rotation zone, you could easily get back to that 50K. I can't say easily because you'll still have all the dip buyers come in. What else have I missed? 5.81 million in net worth lands you in the top. Oh, really? I didn't know that. I want you to be in the top 5% and pay all the taxes. You're welcome, Anissa. So let's just take a look. Tesla, still watching for the gap fill in their next rollover play in Tesla as they lay off their supercharging team. Personally, I would not be buying a dip in Tesla. NVIDIA, pretty much the same thing. The channeling, I'm watching for the next rollover play in NVIDIA. Apple, earnings. Do I have people still watching this? Yeah, I do. Okay, just wanted to make sure everybody didn't tune out. Apple, you got the sort of the AI pump, but remember Apple, this hit I'm taking the target off from the short-term double that played out. All right, that short-term double played out now. On the longer term, on the weekly basis, look at this double top on the weekly, and 2 weeks ago, we closed below that. I'm watching for Apple. The probabilities say we should go lower. And look where that final target is, and the 87.5 from the lows of January 23. That's 87.5. Okay? So it'll be interesting to see if Apple on one. Now, this could take because you could also see it on the monthly basis. This could take a while to unfold. So this isn't like, hey, Apple's crashing. No, that's not what I'm saying. Apple watching for the rollover plays because Apple's like swimming with an anchor tied to it now from a technical perspective. Of course, what did I say with of course I do? What are you referencing, Charles? What else do we have? I gotta look at it. I gotta look at Peloton. Oh, I gotta see this. Oh, that's not good. How low can it go? I'm wondering where it's got to get to, because at some point this becomes a takeover candidate. I maybe below $2, but that's an ugly chart. That is an ugly chart. Peloton continues to bleed out. All right, let's just peek back in here. See, unless you get momentum days, you don't really have to worry. See, pullback. Maybe this is helpful for people. Now, we broke that key area with some momentum bars coming into that 50-65 area. Now we look again, and normally I can't do this for streaming, but I have, the multi-screens all up with this stuff, so I don't have to change the charts. So we've come back into a zero tick. We've come to a zero tick. So this is where I start watching for the tick bounce. Okay? And we've come into the area. So do I just magically, hey, we've got zero tick, I would buy this? No, I'm watching on a shorter term basis for anything to hold around this area right now. And this tick bounce and any bounce we get will teach me a lot. So if I was trading this on the shorter term, okay, now we could come down and break these lows, but this hit my key area I already outlined. So I'd be watching with a tick bounce. These are how I'd structure from the pre-market highs to these lows with the bounce. And I'd use these short-term harmonics. Especially look at this. This is where you just use pure price action. So if I were to take off the harmonics, where's the key breakdown area? It's what I had before, right? 50.77, 50.76. We got the key breakdown area, right? This zone, you can see it, broke down with momentum. So then if I'd use the harmonics, and this, it's trying to get with that zero tick, it's trying to put in a little short-term base. I'm just showing you stuff for the shorter-term trader, but you can always apply this to longer time frames. You just have to be a little more patient. And look where the 50% is. Right at that upper breakdown zone. So if this were to, let's say we go into now more of a choppier day, what would be a very key target bounce area for me? That 50.77. And then what do I need to continue to try to carry some of the position? I'd need a follow through above 50.80 on a short-term closing, because then I'd start watching this high area for another very key target. But this is so far is turning not into an upside momentum day. This is turning into a choppier day with non-farm payrolls and ISM services and Apple earnings after the close. So if we flop back to the tick, see how we've come back to that zero level, and it's starting to get a tick bounce. Now, if this tick can't sustain anything, even getting really back into 600 to 800 area, if we can't even sustain, then I'll be watching for the next rollover play and a possibly bigger bottoming pattern. Does this make sense? Okay? I hope it does. All right. Carvana crushed. I did not look at Carvana. Well, Carvana's numbers are always weird. Carvana, I do not trust their accounting whatsoever. They did beat on revenue, though. The vending machine beat on revenue. Would not be paying up 120 for this thing. Would not be paying at a price-earnings ratio of 111 for the vending machines. But thank you, Rich. Live teaching is exponentially helpful. Thanks for your staying on. Mike, can I use a 100 tick chart or 1,000 tick chart, or is any size tick chart? You can. I've used volume tick charts before. And if you're more focused on the tick, see, the NASDAQ tick can get a little more skewed. If you want to watch both of them, unless you're a NASDAQ only trader, I'd still keep an eye on the overall, the tick, the NYSE tick versus the NASDAQ tick, okay? You want the NYSE cumulative. Now, because now look at this. Look at this. See, we got that bounce off zero, and what's happening? It's breaking down. And we don't have a strong bounce. So this now, in order for me to ask to get bullish, has to form a stronger bottoming pattern. Which we don't have yet. Again, you know, the only time, I've said this before, pretty much the only time I'm on a 1 minute chart is if we're in massive momentum. Or personally, I don't recommend people trying to micro scalp this. Micro scalping is very different from day trading. But you see, now here's how we wait for a bigger bottoming pattern. Because the tick is now dropping below zero. This is still a very key area. However, if we do our other harmonic run-ups, look where we're sitting right now. We're below the 62.5. Okay, on a short-term basis. All right. So, does that mean, oh, market's going to know? I'm going to start watching this key area again on the longer-term closing basis. Because if we start getting 4-hour closes below this 50.71 area, not real good in the short term. Okay. You're welcome, George. Hey, thanks for tuning in, George. I didn't see you there earlier. All right, so that's how more important to me, like your analysis of opening 5 minute, unless we're massive, remember, you don't get momentum most of the time. You don't get momentum. Unless we have massive momentum with, all right, we have either a really strong or a really weak tick, and you start getting momentum bars off the open going with the breakout or the breakdown move. That's the only way that I need to jump on something sooner or later. I can wait for a setup going into the opening area. See how it's still holding this area. And I can wait for a setup. Now this, because of where we sit, going to glance at the VIX also, go through my rotation. See how it's still slightly elevated? I'm going into it's going to be most likely a choppier day today. We had the momentum breakdown, but we're still holding key support. All right, so I'm leaning, unless something drastically changes, still going to be going in for a choppier day. It's just trying to find a base. We've already worn out some momentum. All right, if we do get through here, my next key area is 50.58. With that, I sort of have to go now. I'm using a range chart instead of low time frame charts, and 64 and 16 range seems to held up well. You use what works for you. Range charts can be very good. And I've played with those a lot. I used to use them for a time. The challenge I have now is it's a little too volatility dependent, and a lot of the programmed automatic trading from the big firms still uses time as keys. Still uses time. So that's why I still favor time charts, because time of day, which I don't talk about here a lot, is critical. So we're also getting waning momentum down on the 5 minute. You're welcome, Charles. You're welcome. I watched the 5 minute, plan on a 4 hour, and enter on 1 minute and 30 seconds. Do what works for you. All right, now we're still getting downside momentum. Bet you we had a nice little tick breakdown. Oh, ticks? No. All right, this is something. I'm going to leave it at this. When you start seeing this breakdown and we're not getting the continuing breakdown in the tick, I'm watching now for this to be the final push down and then a bounce move, but would I be overly bullish on the bounce? No, because now the key area that I'd be watching on any bounce move would be 50.68. 50.68 would be the first area I'd be watching on any bounce move. You have adjusted to your Western time zone. I'm still, 4 a.m. is still a little too early. 4 a.m., but I'm getting there. With that, I hope everyone has a wonderful trading day. We're getting still, the downside momentum is pushing through. So there's nothing stabilizing. So if you're trying to be a bull into this market, I'd wait for some kind of stronger bottoming pattern. And then I would not be in overly bullish mode. I'd be in choppy mode. Choppy, with watching for rollover plays. I should just stay with us all day? Well, I'd have to charge you then. Yes, the 1,000 tick showed a breakdown pattern above the rotation zone. Well, I'm glad. This is what I love. Use what works for you. And if there's something you can take into that I've taught you that works with what you're doing, then put it in. If it doesn't, then stick with what works for you. Everybody can be different. People's time frames can be different. There is no one absolute way to trade. But I think where more people should really focus on is the macro analysis, that 4 hour and daily. Okay, 4 hour and daily is really key. Because if you can start getting that right, it can keep you out of trouble on the smaller time frames. With that, I will be back tomorrow for non-farm payrolls and the ISM numbers, and we'll see what Apple printed for earnings. Until then, I'll talk to everyone later. Bye for now.